Hi again, I'm David Maurice, fee-only certified financial planner with Worthwhile Wealth Counsel.
And I'm Andrew Worley, Associate Advisor at Worthwhile Wealth Counsel. So David, there's a couple of terms that we use in our videos that I feel that we should take a few moments to explain to folks so they can make better sense of the jargon surrounding investing.
Yeah, that's true. There is a lot of jargon in our profession. So what do you think we should start with?
Well, for this week, I thought we might discuss the terms value and growth.
Okay, that sounds good. So let's go ahead and get started with those. I'll take value, you take growth. How's that sound?
Sounds good to me.
Okay, well, when we're talking about fundamental measures of a company, just looking at their balance sheet or whatever, they take things like the price to earnings ratio, the price to book ratio, and dividend yield. Those are three of the more dominant kinds of elements to determine whether a company is kind of on sale. That is, the price is lower than would be expected from that book value, and dividend yield would be low or would be high with value stocks, and the price to book, much like the price to earnings. So we think of them as being cheaper on sale, and that's how we do that with the value stocks.
Okay. And then with the growth side, companies that have a strong growth outlook, potentially above the average growth of the market, are referred to as growth stocks. They have a high price to earning ratio and low to no dividend yield at all.
Just
When
the
invest,
opposite.
yes, and when investing in growth companies, we expect earnings from in the form of capital gains from the expected growth in stock price. That's if the company continues to grow its sales and earnings.
Correct. Very good. So when we are reviewing the market performance report each week, we talk about these areas. You'll hear us saying like large growth companies, large value companies, large foreign value and foreign growth. And so these are a couple of areas that are known asset classes.
So in a nutshell, value stocks are stocks that are trading below their fundamentals. Value funds are funds that hold stocks in many of those type of companies. Growth stocks trade at a higher price compared to their fundamentals because, again, investors are expecting the company to grow along with their stock price. And growth funds are those funds that hold many shares in growth companies.
Great. So that's a good wrap up. Let's take that discussion on over to our weekly performance report. Tell us how that looked last week.
Sure. So last week, as suspected, the shift in momentum from value to growth was just a pause and a brief one at that, as value once again trounced growth in the U.S.
Trounced. I like that word. Just left it in the dust. So, for example, large value was up 1% versus a large growth, which was up just 0.15%.
And that was similar in mid value. Mid value was up about 1%, where mid growth was down 0.4%.
That's trouncing. It's just eating dust. How about that? So we also had small value up at almost 1.5%, while small growth was just up 0.25%.
And then looking at U.S. REITs, they were all up about 3%, with year-to-date returns of about 21.38%. Global REITs were also up from the previous week by 1.2%, with a year-to-date return of 11.3%.
Nice, not so bad. So, and wow, we haven't talked about or mentioned commodities in a little while, but they were up 2.4% on the week, and the year-to-date return is 21.4%. So 21.5% here, just 6 months into the year. Oh, we're just so excited about seeing commodities come alive, hit double digits, and now look at them go.
And then when we look at foreign equities, they behave very much like the U.S. equities, where value was best in growth last week.
Value best in growth. That seems to be the theme for this year after last year, kind of the other way around. And boy, you did it again to me, didn't you?
Sure did.
You left me with the bonds. So bonds, oh, those boring bonds, they remain beleaguered, but they're not busted. Well, they're not bombed either.
Yes.
Bombed, busted. These are dramatic terms. They're not that bad. They're just not exactly moving up very much.
Well, that should be it for this week's market performance report.
So who are you?
This week, as always, I'm picky.
And I'm always petty.
And together we're the picky pedants
of Worthwhile
Wealth Counsel.
Wealth Counsel. See you again.